Head and shoulder patterns are one of, if not the most ubiquitous pattern in trading, in the markets. I mean, if you mention day trading with reference to patterns to any kind of trader, it's probably going to come up in conversation, right? There are a lot of things about the pattern, though, that a lot of people don't know about. There's so many aspects to a head and shoulders pattern. For instance, yes, the pattern is a reversal pattern at first. But did you know that it is much more likely in the long run to be a continuation pattern? Or how about the two different types of head and shoulder patterns that can show up? Let's take a look. Hey there, John Henry here, SSFTG. Welcome to the video. If this is your first time on the channel, welcome my friend. I hope to earn your like and subscription today. So breaking down head and shoulders patterns, there are really a couple different ways to do it. First off is the optimal pattern. Now, when I'm talking optimal pattern, I'm not going to say why yet. We're just going to draw them up and we'll get them going from there. So we have our optimal pattern right here. And then we have our suboptimal over here. Now, the suboptimal may look very, very similar, but it's got some major differences. So first off, one of the big things when we're looking at optimal patterning versus suboptimal patterning is understanding what the purpose of this is. If we are looking to take both ends of it, meaning as a reversal breakdown and a reversal continuation later on, right, then we have to approach this a different way. But first off, as far as the pattern is concerned, this is the overall layout, and the major difference here is in the neckline. It all comes down to the neckline, and the neckline is simply the two inside peaks. If you draw a line across these necklines here versus this neckline here, you will see a distinct difference between the two, and that is exactly what makes them optimal or non-optimal. The reason behind this is simple. It's the risk measurements. If I were to enter in short of the break of the neckline, which is generally how you enter a head and shoulders pattern, or I suppose you could wait for a breakout pullback continuation. But either way, traders are looking more often to find a way in during the breakout for the follow through. If they're entering in there and they have an up slanted neckline, that means that they're going to be closer to their two different risk points. There are two different risk points depending on how you want to approach this. The low probability, high reward, low risk scenario, or the slightly larger risk, slightly higher probability, still very large reward up on the further head point. Those are the two major areas. Now, the reason why this is so important is if I'm entering in down here, my risk still has to go in the exact same spot. It makes it incredibly difficult to find good follow-through on a suboptimal platform. Now, something of a consideration here when we're looking at these two different points. Regardless of the way that you're using them, when you're measuring for the downward objective, we're measuring off of point 1 to point 2, the break point. Then we can create a secondary box around point B to back to point A again, right? Now, let me break down what I mean by this. First off, crude oil had an incredible head and shoulders pattern that we really can't ignore. So the head and shoulders pattern on crude oil is right over here. Let me highlight this with the polygon tool. So we've got our left shoulder, our head, and our right shoulder for the breakdown. Now, obviously, when we look at this, we can see the head and shoulders, the neckline, everything is there, plain as day. Right? We've got the head and shoulders pattern up. We've got the breakdown of the neckline. We've got everything laid out. So if a seller is going to be selling for the move down, remember the initial reversal prior to the continuation, sellers are going to have a break of the neckline here, and their risk will go above the right neck or the head, either way. And this is going to give us our measurement. So let's draw a line across the neckline so we can have that easily, and we'll measure with a stop above the highs to the break point. And if we go all the way down, this line right here is our 2-to-1 objective. Now, the next area is going to be dragging this up to the next point. The entry point stays the same. That didn't change. The risk just got a little bit bigger. And this is going to be the bottom of that box. And effectively, you can draw a box down here. This is going to be our zone of interest as far as the continuation later on. That is also the sell side objective. Now, so you understand how I measured those. All that is a 100%, 200% measurement, 300%. You can go as far as you want. But generally, most head and shoulders patterns find their continuation reversal point, meaning down here, at around 200 to 300%. That's the box zone of interest. Now again, this is an optimal pattern, meaning that we have an up slanting neckline that we're looking to break down away from into the zone of support. Perfect, right? That's the kind of break for Head and Shoulders that we want to find. And you can see, I mean, look at the responsiveness. There's a reason why it responded so well down there, because it is literally textbook. It is perfect. Now let's look at a different kind of Head and Shoulders pattern, right? The suboptimal. We have the neckline, the head, the neckline, and the break, right? Now what's wrong with this? Well, first off, if we use the polygon tool, because I think that's a little bit clearer, we'll go up to the left shoulder, to the head, back up, and then we've got our Head and Shoulders pattern. And it is a Head and Shoulders pattern. We have this, the head, the right shoulder, the break. The big problem here is the break of the neckline. Where's the break of the neckline? The thing's way down here. It never actually broke the neckline. Now, if it were to have, let's say as an example, this did drive down and break the neckline. Think of how far away they have to have their stops. This kind of trade still has probability, but we're not factoring the reversal zone on a 1-to-1, 2-to-1 measurement. We're measuring it off of a half to 1. Scalpers, right? Half to 1 to 1-to-1. The low or the high probability, high risk, right? Big risk if they're entering way down there. Gold was another one that had an optimal Head and Shoulders pattern. I'll give you a second to see if you can see it, and then we'll mark it up. You can pause the video if you want. Right? But then we'll jump into it. So as far as the overall area of interest, let's highlight it with a polygon tool. We've got, I mean, the neckline is so crazy to try to figure out where it starts. I'll just start from the last point that's of obvious interest. We'll go to the left shoulder, the head, down to the neckline. Now, it actually broke down significantly further, but that would be the Head and Shoulders pattern. And as far as the Head and Shoulders pattern, look at the neckline. The neckline is an optimal break. And they did actually have a break and a pullback, so it did actually have that happen for it. But look at where you would have to measure, right? The break point is here. The first risk would be here. The secondary risk would be above the highs. And if that's the way that they're approaching it, there is going to be a very wide target box. That's a big disparity between the two. But we can still figure out where that zone is going to be. The first zone will be down to the break point, which is going to be about right there. And that begins there. If we catalog this all the way up to the highs, it might not have even made it way the heck down there, but it is way down there, all the way there. So if we highlight this box zone, this is going to be the zone of interest for the reversal and the continuation back up. And this is where gold pulled into. They found support for ages. They dug a little bit lower in. And in fact, if you look at where we are, we're still technically inside of this area. We're still ping-ponging around this zone. That's why I don't mess around with these Head and Shoulder reversal points. But if we go back to the neckline, it was a beautiful break. It hit the first objective on the shallower side. It did everything it needed to do. It even offered up a breakout pullback. I mean, you can't ask for a better setup. So hopefully this helps you understand really all of the different nuances to Head and Shoulders patterns. There's so much to them. I mean, yes, they are a regular breakdown pattern. You take it for the breakdown, you look for the target area. But don't just stop there. These areas create monster reversals. I mean, look at this. This has been the entire month of March going into April, and it's still bouncing off of the support. These areas can create huge zones of interest that stick around for a very long period of time. And hopefully this kind of highlights that for you. Of course, if you have any questions, comments, thoughts for new videos, or anything else, drop them in the comments below. I always love hearing from you all. But until the next one, thanks for watching, and we'll see you then.